Welcome everyone to a Wolf Financial show. Wolf Financial. Welcome, Evan. This is the Solid Report featuring yourself, Sam. Everyone knows who Evan is. Largest FinSwit account on Twitter. Been following for years. Great to do this. Wow. I just unbelievable how far we have come. Evan, how are you today?
I am doing well. I am in warm Miami for Art Basel, and I am super excited to be joining you on this live stream today, Sam. I'm excited for this.
Thank
Obviously,
you.
you've been going live for a long time doing this stuff. A lot of people on here know you and are fans of you. And no, I'm excited to have us doing the support of Wolf. This guy kills it. So I'm excited for this.
Highly
YouTube, YouTube.
appreciated, sir. Yep. Actually, is it warm in Miami? I mean, I don't know. In California, it's supposed to be warm, but it is freezing
It
over
is
here.
warm here in
Man, it's freezing.
Miami. It is 80 degrees. So it is nice. No,
Okay,
no
okay.
complaints on this end.
I mean, definitely no complaints for you. BMNR is doing very well today. Actually, I hope it's still doing pretty well. I haven't checked it in the last 30 minutes. Actually, hold on, let me bring it up right now because for some reason my trading view isn't working on my main desktop. But just to recap, guys, thank you again. We're going to be doing these live streams about 4 times a week. I'm going to be shooting for this 2 p.m. Eastern slot every day. But if not, it's really going to center around like certain events that are happening, whether they're earnings, whether it's like on ground interviews or actually interviews with other popular guests, CEOs of companies, and what have you not. But honestly, this is a very exciting show to be starting with the Wolf team. And what other time is there to start the show than to see Meta up like 4% today? Amazon, I wish Amazon was actually up a bit more today, but can't really complain when a lot of the big holdings in portfolio are doing very well. Actually, let's see over here. BMNR is up about 3.5%. That's not bad. You know, that's actually interesting how BMNR is up 3.5%. But Ethereum is actually down on the day. But maybe Ethereum closed more down yesterday. But definitely a great time to see in the markets. We're going to get into more than a few things during the stream. We're going to get into Meta. Why exactly is Meta up 4%? It was actually up about 8% pre-market. And for some reason, I guess maybe the market doesn't believe them. I don't know. But 4% is still a pretty big move for a close to $2 trillion company. And then we're going to go over a couple of earnings over here. We got the Path earnings, which did very well yesterday. Shout out to Stock Talk. He's the one who called out the great setup on Path. And right now, Path is actually it's about 24% up. It's at 18. Wow, that thing is just a monster today, doing really good. Snowflake on the other side is not doing so well today. They reported earnings and they are down almost 12% on the day. And CRM, Salesforce, is up about 4% today. So we're going to dig a little bit into those on the high level, nothing too deep, but just to kind of understand like why these stocks are moving in a certain direction today. And then we're going to go over some indicators here. Santa Claus rally. Is a Santa Claus rally coming? I mean, it looks like it is. Today it's kind of stalling out. We'll see what happens. But the small caps are definitely feeling the Santa Claus rally. The IWM is up about 1% following a 1% day yesterday. So we'll see what happens with that. We'll look into a few indicators here, including the Zweig burst. Zweig, you know, I don't even know how to pronounce it, but we're going to look a little bit into that. Also, some other indicators that I look at. And finally, man, we're gonna go over some NFL picks tonight. I apologize, guys. Like I love football, and I'm also a bit of a degenerate myself. Nothing too crazy, a couple $100, but we're looking at the Cowboys playing the Detroit Lions tonight, and we're gonna get a little bit into that, see what's going on. So let's get started with the show. Appreciate you guys. All right, so we have Meta today. I'm actually gonna pull up the Meta chart right here, real quick. 1 second. Nope, I don't have anything I don't want to share on that screen. Okay, hold on. So we got Meta. We got Meta up here about 4% today. Guys, shout out to Chris Carnival Cruise, Chris Cruise Lines Patel. That's one of the great names they have. Chris Patel and I, we've actually been really good friends for the last couple of years. And this guy's had some phenomenal calls lately. I mean, he's called the cruise lines when no one wanted to touch them. He's called Verizon when no one wanted to touch it from $30 to $41. And he has been pounding the table lately on Meta. Mind you, a lot of people have been pounding the table on Meta, but his entry in this was pretty nice. We're already seeing that 4% today. If you haven't, go follow Chris on X. I'm actually going to put his X. No, man, I don't do dark mode. I don't do dark mode. I like light mode. But anyways, I'm going to throw his X link up here in a bit. I just want to play a clip from CNBC regarding Meta, giving a little bit of explanation as to why the stock is up so much right now. And let me just bring this up over here 1 second. I'll get a little bit into why I think it is actually up a bit more today. Hold on. Closing this. We're going to definitely get a lot better at this. I apologize, but I'm
It's the
just...
first time, although he's been killing it on his own channel. I will say Chris did also say, and I quote, "I'm here to troll Sam." So you maybe don't have to put his
Yeah, well, I mean, he's been trolling me for a while, and I've been doing good either way. So let's see what happens with the continued. I think the trolling is actually helping the algo, in my opinion. But I'm going to go ahead and play this clip. Let me know if you could hear it.
After a report said the company is planning to meaningfully cut the resources devoted to its Metaverse efforts, slashing budgets there by as much as 30% next year. Let's bring in Gil Luria, D.A. Davidson's head of technology research, for his take on this. So, Gil, how do you think about it in terms of magnitude of spending? The market's, added about $100 billion in market cap to Meta this morning in response.
Yeah, if they shut down the Reality Labs business, earnings would go up by about 25%. They lost $18 billion last year. And let's not forget, the business is there for a reason. Mark Zuckerberg wants to own the next platform. The next hardware platform, in his eyes, will be a combination of glasses and goggles, not a handset. And he doesn't want that to be owned by Apple and Google anymore, because he has to pay them 30% off the top. That's why he's been investing so much over the years in Reality Labs. But what's happened is he's realized that AI is much further down the road than the shift to the hardware platform. So he would rather invest in winning in AI and building data centers to support his research and better frontier models and better chat than invest in the hardware platform, which may take longer to play out. That doesn't mean we're not going to get better Ray-Ban glasses and Oakleys and the display glasses. It just means that he needs to shift some of those resources to AI, because AI is incredibly competitive with Google, with OpenAI, with Anthropic, and to some extent with Amazon, Microsoft, and many Chinese players. So that's what he's doing. He's moving chips from Reality Labs to the AI investment.
That would imply, though, that he's not going to let all the money fall to the bottom line that they're not spending on Metaverse, right? I mean, I know we don't know granular details here, but it would suggest that, essentially padding out the AI investment budget.
Well, that's right. That's why investors were disappointed when they reported the quarter. They reported 25% top-line growth in the quarter, which, by the way, is almost twice as much as Google. It's faster than Microsoft, Apple, and Amazon. And the stock was down because they commented about increasing CapEx and operating expenses even faster than that next year, meaning lower margins and not as much earnings growth. So investors reacted badly to that. And as he's done in the past, he's realized that in order to keep the share price going up, he needs to moderate that. So he needs to move some resources from Reality Labs to AI so he can maintain margins into next year and can continue to grow earnings at the rate of revenue growth, which again is a very healthy revenue growth.
All right, so let me close that one down. So it was pretty interesting what the guy was saying. Right now, what we're really trying to focus on with Meta is decreasing the spending. I actually have this tab open right here. Let me go ahead and share it. This is from App Economy Insights. They're the ones with like the beautiful looking charts here. So we have the whole graphic on how much Meta spends in terms of the revenue coming all the way down to the bottom line. And if we look over here in operating profit, this is the one that we really need to look at when it comes to Meta and why the stock is up 4% today, which in my opinion should be up a lot higher. But Reality Labs only makes $500 million last quarter. Only $500 million. I mean, I know that sounds like very small, but yeah, they made $500 million last quarter in Reality Labs. Family of apps made $50 billion. in last quarter. Obviously, the behemoth here is Family of Apps. Now, Reality Labs includes the hardware or the bio devices, so you got the Meta Ray-Bans, you got the Oculus and everything. And then it also includes the spending for the Metaverse. So that's not going to change. That's going to continue being $500 billion a year. We'll see if that last quarter, we'll see if that actually increases or reaccelerates, but that's not the important part. The important part is the amount of spending they're putting into Reality Labs, which includes the Metaverse. This morning, we heard the news that Mark Zuckerberg said he's going to cut Metaverse spending by 30%. That is going to be translated into higher operating profits. If you look at Reality Labs, the operating profits of Reality Labs was $4.4 billion on the minus side. Family of Apps was $25 billion. So that means that I'm not sure if it's going to go flip positive over here. And I don't think they actually specify how much Reality Labs is spending on a quarterly basis. But hopefully we bottomed in terms of the Reality Labs negative operating income. So if this operating income goes up, this will not only make Reality Labs possibly a profitable sector, which will be the first time ever, but it will increase the operating margins for Meta, which already has phenomenal operating margins. I think it's like somewhere around 40%. We'll look at Fiscal.ai, which is one of our partners, in a minute. But it's just last quarter, the market got pissed off because the operating margins, whatever, the market had a fit, dropped Meta down below $600 a share. It was a little bit of an overreaction, in my opinion, but the timing could not have been any better for the bears because that was the same time the market pulled back about 6%. And everyone thought we're getting into recession, the market's going to blow up, blah, 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 all this stuff. Here we are today. The market's near all-time highs. I think we're about less than 1% away from all-time highs. Meta is at $664. Actually, let me pull it up again. Meta's at, it's at $664 still. Man, that thing's not budging. I don't know. It was at like 685 pre-market. I don't know why it's not at 685, but whatever. It's not a big deal. The calls don't expire for a year. Anyways, if this increases, the bottom line will increase. So you have expanded margins for operating profit. You have expanded margins for the bottom line and so on. Free cash flow margins, I'm sorry, guys, it's still going to be very high. Their CapEx is insane. But so is every single hyperscaler. However, if you look at it from this perspective, and Chris did touch on this earlier during the spaces for the Earnings Hub recap, if you expand the margins, that is the bull case right there. And on top of that, if you expand the margins on the top of the bottom line, especially if the company is, I don't know if they're buying back shares. I think they're still buying back shares. But then the EPS will actually grow. And if you reaccelerate the EPS growth, well, we all know what happens to stocks as the earnings grows. Earnings growth acceleration means increased price appreciation. And if you have that going, Meta's going to $1,000. Let's go. Meta is going to $1,000. Now, I don't want to be balls to the wall bullish here. It's going to take some time for that to translate. I don't think it's going to happen tomorrow. I don't know. Maybe it could happen tomorrow. We'll see. Maybe we're going to get like a $4 trillion price tag in Meta. We'll see. But it's definitely bullish. And when you switch from like a completely negative sentiment into a positive sentiment, that's when money comes rushing back into this stuff. And that is the reason why they're buying back $45 to $50 billion per year. Hell yeah, let's go. So that's again, financial engineering of these mega caps is just phenomenal. This is the reason why Apple still expands or increases its EPS on a year-over-year basis because of the fact that they are buying $100 billion of stock a year, maybe more than that now, actually. Meta's doing $50 billion a year. That's just the name of the game with these mega caps. But I think we've been waiting years, since 2022, 2021 for Mark Zuckerberg to say, like, look, guys, we're going to start pressing the brakes on this Metaverse stuff. It's not working, all right? And it's like, okay, Mark, it took you like 3-4 years. But like, hey, guys, I'm happy to shareholder, and I want these goddamn calls to print, all right? Let's go. Let's get these calls to print. Let's go. All right. So that does it with that segment. How's everybody in the chat doing? Oh, Jose Naharo. Yo, this guy is the best when it comes to the semiconductor space. He is very knowledgeable in that space. I suggest you guys go ahead and follow him if you haven't on YouTube and Twitter.
I will say, I know we were talking about CES. Be a little jealous. I am going to see Jose there.
Oh, okay. Your boy Jose is going to meet you. That's cool. Yeah, that'd be really cool. I was actually supposed to go to that as well. That one's in Vegas, right?
Yeah.
Oh, nice. Well, I mean, go ahead and say hi to Jensen Wong for me. I know you guys are going to be kicking it off there. Maybe Jose might give up some time, and then you can meet with him too when he's with Jensen Wong. Water level, we'll find its level. Metal bounce, Google will drop. Okay, well, the resident bear is over here. Actually, I wouldn't be surprised if ES or if NQ drops like 100 points up here. You know, your boy Emp is going to be short that thing. He's always catching those shorts all the time. I don't know what it is. Maybe he has a massive account and he's the one who's pushing NQ down, but we'll see. We also had a few other things in the news yesterday, but more specific in the earnings. I just want to do a recap over here of the time slot to provide the timeline to you fine people. We had, hold on. Ooh, you're going to be interviewing Jensen Wong? That'd be pretty dope. And where is this thing? 1 second, guys. Going to bring up something here. All right. This is Earnings Hub. One of our proud partners. All right. So we had the UiPath earnings yesterday. And just to go, oh, look at that. I got to go log in. All right, let's go ahead and log in. Oh, okay. There's my email. That's fine. Go ahead and shoot me an email if you feel like it. All right, so we got UiPath reported earnings yesterday. I mean, the earnings were good, right? My thing is that we were just talking about Meta, where you got Meta basically going from like very negative sentiment into positive sentiment. I believe we had the same situation with UiPath. Now, UiPath was like a big meme stock for quite some time, and then basically they had a really terrible earnings with the former CEO who basically got kicked out, and then the original CEO or the co-founder of the company came back and is really turning around the ship, but. Is it Daniel? I don't want to say Daniel Niles. I keep on forgetting his name because I keep on seeing Daniel Niles and I see the CEO's name. Anyways, he's the co-founder of the company. He's bringing it back. The earnings call was pretty phenomenal. I actually really enjoyed the earnings call. I was very hyped up. This is actually in the software space as well, which is like really where I shine. And the company's got annual recurring revenue, which is very good because the revenue becomes predictable as far as forward-looking revenue for the company. And that came in very high. As a matter of fact, if I zoom in over here, I wish I could make this one bigger. Oh, I could make it bigger. Look at that. Man, Hamid thinks of everything. All right, so, whoop, 1 second. A little bit of technical difficulties here trying to bring this up. All right, so we had ARR for Q4 guidance actually increase. That's coming in at about close to $500 million a year. And I think that was Daniel Dines. Appreciate it, Daniel Dines. Thanks, Evan. So when you basically forecast for a higher ARR, that means that you're basically saying that your customers are spending more money. Actually, hold on. Let me go back. Let me go back exactly what UiPath is, because I think people see Path and then they think Kathy Wood, and all this stuff. But let's go into what actually UiPath actually does. UiPath is more of a robotics automation platform. And originally they started by having basically this desktop app that people install on their computer, and they made money through selling licenses for their software, much like a lot of these older products did, like Microsoft Office sold by licenses and so on. And then they transitioned over into subscription revenue, which is really the cream of the crop. This is actually how Microsoft really made the transition when Satya Nadella started in 2018, where Microsoft switched from the license legacy model for Microsoft Office to a subscription model, which is basically so instead of paying me $100 for a license for as long as you have for Microsoft Office 2013, you have to pay me $100, but you can get the latest version of Microsoft Office as much as you want. Just give me your damn money, right? So that's basically what Satya Nadella did. And a lot of these software companies transitioned to that. Snowflake transitioned to that. MongoDB transitioned to that. A lot of these companies transitioned to that form of subscription modeling. And then UiPath did do that. But they did it late. And the problem is that when you do it late, you don't have the recurring revenue and the market penalizes it for you, because if you sell by licenses versus by subscriptions, you're going to get a lot of clients who drop off because they figure, instead of having 10 licenses, I only need one, and everyone can just share that computer, right? UiPath switched over to the subscription model and then more on the end user basis, so that way each user that uses it will have to pay for a subscription seat. And on top of that, they have a lot of enterprise companies subscribing to their software. So when you have enterprise companies subscribing to your software, that's like hundreds of thousands of subscription seats you're basically loaning out to people. Instead of small businesses where it's like 10, 20, whatever. This is the reason why whenever it comes to software, you really want to focus on the companies that are more of the enterprise base versus small business, because small business can fluctuate, can go up and down, but enterprise is more predictable and they're more sticky than the smaller businesses. And plus enterprises, of course, have a bigger pocket, right? So, you're going to sign up Meta for 1,000, you're going to sign up Microsoft for 1,000 licenses, or you're going to sign up Service Titan for about 10 licenses. We'll see. I think, obviously, the money is in Microsoft, right? So when they transitioned into this, you started seeing a little bit of a pickup in terms of their revenue. So if we go to UiPath's revenue here, if we go all the way back to when maybe they weren't performing so well, the revenue was like 225 a quarter. But then just this latest quarter, they showed up with 392 million and then, 411 million, which was a very heavy beat. But the market's very forward looking on this, right? It's nice. You guys did well, but are you going to do better next time, right? The market is always hungry. It wants more, right? So we'll get a little bit into Snowflake in the next part, but this is the reason why UiPath is up so much, because one, they beat, but also they raise guidance. So they beat in the top line, they beat in the bottom line, but the most important part is beating in the guidance. That's a triple beat across the bar, which SoFi does every single quarter, but for some reason they always sell off. I don't know why, but basically you had that with UiPath. But the biggest thing about this was not the fact that they had a triple beat, but the fact that a lot of their revenue is tied in with agentic AI. Now, what is agentic AI? Well, classical AI, which is what we all use every day, ChatGPT, basically integrating your applications by communicating on a programmatical basis with the LLM, OpenAI, Gemini, whatever it is. Agentic AI is a self-serving large language model, or in this case, a subset of large language model that's catered to remembering all of your preferences, all of your previous stuff. But on top of that is more forward thinking on that by understanding what you are doing as a user and then giving you the best results catered for you. But also is like kind of your AI assistant to reach out to other LLMs that are mostly optimized for what you want. And the way UiPath works is that they provide the platform for building these agentic AI solutions. So that way you're using them as a proxy to get to every single other AI you want to on the web or wherever it is available, Gemini, OpenAI, whatever it is. And the great part about this is that their number one competitor was actually Microsoft for the longest time. And they are still a bit of a competitor because they want to push out Microsoft Copilot out there. They want to push out Power Automate and everything. But what UiPath is doing is that they're being a bit more strategic with the partnership. So then that way they're turning their competitors into partners, right? Obviously, Microsoft wants some money here, but if you're partnering with UiPath, then maybe they both kind of win, right? And I think that is what the current CEO or the co-founder is doing. Daniel Dines is doing. He's seeing that and he's building upon that. On top of that, I listened to the earnings call yesterday. I'll actually provide a link in a little bit that was basically like a breakdown of the earnings call. But there were a lot more things that he said in the earnings call which were really good, including basically saying that the yen was actually a headwind this quarter. But if we look at the chart for the US dollar, I'm actually going to share the whole screen now. So if we look at the US dollar here, oh man, the market's taking a dump. That sucks. If we look at the currency,
no real news, by the way, either. Moving slower.
Yeah, it's just chop all day. We're in a big range. I bet you Emp is shorting it right now. Caught 3 shorts this morning. What is the news prediction markets? Yeah, he's definitely short right now. This freaking guy. Can you stop shorting the market? Maybe that way we can hold on to our money. All right. So if you look at the Japanese yen, and the reason why I bring this up is because they actually referred to it in the earnings call. UiPath has international revenue, and they have clients in Japan. So when they convert that revenue into US dollars, if the Japanese yen actually gets weaker, which is what you've seen here, it's actually going to have a negative impact. But the Japanese yen goes up, that means that when they translate the revenue to US dollars, that's actually more beneficial. So actually, I do wonder why they said that in the first place. But anyways, the US dollar is, in my opinion, I think the US dollar is going to go to like $95. All right. So if the US dollar goes to $95, that means all of the other currency, most of the currencies around the world are likely going to appreciate against the US dollar, which means that all their international revenue that they get, when they convert it back to the US dollar for earnings, it's actually going to look better, because then that means that the US dollar is weaker. That means that you can buy more US dollars for the currency that they got paid in by their clients internationally, which means that it can contribute more to their top line, and then so on to the bottom line. So if that happens, guys, I think we might have a beat from last quarter. And in fact, if I look at the historical estimates here, so we actually they've actually beaten revenue 16 of the 17 times, and they got it up, which means that there is like a 97% chance, I think less, like 94% chance they're going to beat next quarter too, which means that the stock's going to $30. All right, anyways, guys, not financial advice. I'm not saying it's going to go to $30. I just, I'd love to make some money on it too. I have a position in this. Shout out to Stock Talk as well. He's the one who brought this on my radar. Looked into it more. Obviously, fundamentals look good. I was invested in this company before it got cut in half. So unfortunately, the position got cut in half. But it was a very small position at the time. This time I sized it up pretty nicely. So it's doing pretty good there. So that is UiPath. If you guys have any questions on any of this stuff, feel free to shoot it out or message me on my X account, or even like comment on it or anything. This is my X account right here, in case you guys are watching. But of course, you definitely want to follow the Wolf Financial account, where all of that information is going to be transcribed and sent over to me anyway. So appreciate that, guys. And for anyone who's on Twitter watching, we got the whole show reeling on the YouTube account. So go ahead and check that out at Wolf Financial, Wolf_Financial on YouTube, or go ahead and follow that link there. Appreciate you guys for being on here, everyone that is joining. All right, so let's move on to the next part. We got Snowflake earnings. 1 second. Okay, so Snowflake. Snowflake is well, I mean, it's not doing that great today. And let's see here. Yeah, it's down about 11.3%. Why is Snowflake down 11.3%? Well, I got to admit, when you see a chart like this, and when you are rallying all the way from even like last April, and you come into earnings after rallying 120% in 8 months, you better show up, right? Unfortunately, Sridhar Ramaswamy showed up, but he didn't show up what the market is expecting. And when that happens, well, the market sells you off. So last quarter, they came in at 10. Oh, that's Salesforce. Hold on. Like, Snowflake's not making $10 billion a quarter. That's crazy. Get out of here. Get out of here, Sam. They're not making that much money. So Snowflake came in with a beat, of course. They beat every single quarter, which is great, but sometimes the market just doesn't care about it. They came in at $1.2 billion last quarter. Now, why is the stock not up? They beat. What's going on here? Why is the stock not up? Well, I'll show you the reason why it's not up. I will show you as soon as I pull it up. Hey, look over here, guys. Look over here. No, that's not what you want to look at. All right, so let me pull this up real quick. You know what? Actually, I'm just going to bring up the earnings presentation for Snowflake. Is this it? No, that's Salesforce. Let's see here. Nope.
Maybe one or too many tabs up there, tab lord.
Yeah, that's a lot of tabs. Actually, no, this is even better. All right, so I had it all saved over there. This is the thing with like these software companies with these presentations. They're going to show you the good stuff, but they're not going to show. Well, any company's going to do that. They're not going to, they're going to say their quarterly product revenue growth, but they're not going to show you the previous quarter because that's going to make it look bad. I mean, long story short, they decelerated, right? So if I go over here to product revenue, all right, Snowflake. So this is basically sums it up exactly the reason why the market didn't like what it saw. They came in with product revenue on a deceleration, 28.7%. Now, I mean, come on, like $1.15 billion for a quarter is pretty damn good, but not when you're 124% up in the last few months, in the last 8 months. Like, you got to show up higher than that. That's likely what really did it. But if you look at the product revenue for next quarter, oh, they put the full year guidance there. Of course they did. Of course they put the full year guidance on there because they don't want to show you. They don't want to show you what next quarter is going to be. So we're going to have to do a little bit of math over here. So if I got 4, 4, 4, 6, and then I'm going to subtract the first 3 quarters. Subtract 1158, subtract 1090, subtract 996. Yeah, so they're basically going to come up with product revenue of about $1.2 billion. Now, the quarter from last year for Q4 was at 900, I think. No, 943. Yeah. So they're going to grow next quarter product revenue by 27.4%. Guys, this is the reason why Snowflake's down. 31% growth the previous quarter, 28.7% this quarter. Next quarter, their guide is going to be 27.4%. So they have to beat product revenue to increase, to reaccelerate above 28.7%. Otherwise, the stock is just going to not do well next quarter. And I'll tell you the reason why this is important in software stocks, because software stocks are very forward-looking because they provide with ARR, RPO, and all those metrics. But if you have decelerating revenue and you're not profitable, the market's going to hate you. If Snowflake was a profitable company, this might not have been a big deal, but Snowflake is not a profitable company. A lot of it is really leadership driven. Snowflake is like one of the best products out there, them and Databricks head to head. Nebius actually has, they have a ClickHouse, but that's not directly competitive with these two. But I think the market is kind of seeing this and they're just like, okay, Snowflake is starting to lose a little bit of market share, but we'll see what happens. I don't think that they're going to be losing any market share. I think the TAM for data and analytics is actually growing much wider than for both of them to eat. But in this case, the market hates it, right? And it's not so great when you're reporting earnings and the Qs are down about 25 basis points. But we will see. Man, Ethereum is just not staying up there. Oh, man. BMNR. Well, I mean, yeah, this is like what really surprises me. BMNR is up about 2.76%. Getting a little sidetracked here, but I still remember here, this is when Carousdale Capital started shorting or released their short report on BMNR. At 59.20 was where I think that they started shorting it. I don't know if this company covered their short, but that's wild. I don't like those guys. I can't believe they did that. They like
Fair
totally
enough. Good for them, though.
I know. Well, yeah, good for them, but it's not good for us. Anyways, well, it's not good for you. It wasn't good for me either because I did have a position and I got stopped out of it. But anyways, sorry, didn't mean to rub that in. But that sucks. I kind of want BMR to come back just because like you're going to get that like kind of bullish momentum in the stock market and you're going to be able to get all that excitement back. The money's going to rush back in and everything, but we'll see what happens with that one. All right, so CRM. Let me bring that up over here. 1 second. Hold on, where's my window? All right. CRM. Why are they up this quarter? Why is the stock up? Why is this software giant up today. Let me just bring this up over here. To be honest, I think they're up mostly because the stock's been down from its all-time highs, down pretty far. Actually, I want to share this screen instead. Here we go. All right, so we got CRM. Hell of a bounce. I think this is more of a technical bounce than anything. But we are coming over here back above the 100-day moving average. We're still below the 200-day moving average here on CRM, which is about $260. But we're doing pretty good over here. It's back above $246, and I would say it needs to close more above this. But it did head into earnings below a couple of moving averages over here. But I think more importantly is that it basically came into earnings at a really tight valuation, and it doesn't really take a lot to excite the street if you come to earnings at a really low valuation, especially when it's like a multi-year low. If we look at Snowflake, it came into its earnings on a very high valuation, but if you look at CRM, it's like the complete different story, right? So it actually was trading right around its April lows. And earlier this year, it was near an all-time high. So it came into its earnings about 35% from its all-time high, and it's at about a $235 billion company. I think the issue here, where did my screen go? I think the issue here, in my opinion, when it comes to CRM, and I'm not going to say I'm bearish it because, look, how low can you possibly go with this company? That's one of the largest software companies in the world and has one of the most stickiest products in the entire world. Salesforce is embedded in so many enterprise environments and everything. How low can this stock possibly go? But I think the issue is that their product really sits on what's the term for it? It really sits on like a customer database, right? It originally started out as like a good sales platform, which is why they call it Salesforce. But it was like a sales platform for a lot of salesmen, whether it goes to software sales, real estate, and everything, to use this as like a database to store all their clients' information and use it to generate leads and so on. A lot of you guys are probably in the marketing space, know a good amount about this product. But the problem is that AI could potentially be a headwind for this company. And why? Because what do you need to store all your stuff in a database for end users to use when you could just ask a chatbot to just give you the answers you want based on your database, right? So if that happens, they're going to lose market share because then people are going to be like, I don't need to pay $1 million a year for all these licenses. I only need a few of them, right? Or seats. Is they use seats that are subscription model based. This is the reason why Mark Benioff, CEO of Salesforce, has been acquiring companies left and right. And most of its growth, I would say, is inorganic at this point. And the market generally hates it whenever Salesforce makes a large acquisition. For example, they didn't like the MuleSoft acquisition. They didn't like the Tableau acquisition. And they certainly didn't like the Informatica acquisition. And the thing is that the growth is no longer organic anymore. It's coming from companies that they acquire. And if they have to do this every time, that means they're going to keep spending more and more money just to stay afloat. I would think that this company, personally, I think there's a lot better. There's a lot of other companies that I would invest in versus this one. I can only tell you what I'm going to do. But if I were to buy a company that I think is going to have a major AI tailwind, it probably would not be Salesforce. In fact, the other company that I do own is ServiceNow, but this is clearly not a better chart. But at least with this company is that they're actually capitalizing off of AI using agentic AI as well. They traded an attractive valuation, $173 billion. At the time, it looked like they were going to supersede Salesforce and become the new software giant. But I guess the market's a little bit afraid about AI killing software. Now, this is a very strong topic whenever it comes to AI. It's like software is going to be non-existent because AI is going to eat all. It's like, I don't think that's going to happen for another 5 or 10 years. And I'm pretty sure the leaders in this world, including ServiceNow with Bill McDermott at the helm, I think they're going to figure it out, which they are figuring out. I think they're going to be able to capitalize off of it. But then you have Salesforce where it's just people are just pulling away from it. again, I'm not saying the stock is going to go down. In fact, it would be very surprising for it to keep going down further, but the market keep going up. But when you think of like what you want to be invested in the market, are you going to invest with companies that are losing market share, or companies that are gaining market share, or companies that are part of a massive theme in the market, right? Or especially companies that have a lot of wiggle room to grow, maybe edging on profitability or possibly going to be profitable the first full year in its entire lifetime, which is UiPath, or maybe companies that are part of a secular theme when it comes to defense budgets, or even companies that are part of the picks and shovels play whenever it comes to semiconductors. That could be On Semiconductor or Amcor or any of that. Like maybe that might be the better field to go in versus buying these companies where its charts just look terrible and they're losing market share, right? And I'm not saying that these companies are losing market share. I'm just saying that if you're constructing a portfolio where you want everything to be higher in 10 years and you got a long-term time horizon, where I don't have a long-term time horizon, I can't tell you what to do. But for me personally, I would rather be invested in strong themes. And that's the reason why I would not buy Salesforce today. I would not. Anyways, the earnings were okay. I don't want to get too deep into it because we're running a little bit late on time over here, about 40 minutes in. Appreciate you guys being here. We're going to jump into the next topic. And the next topic that I have over here is the Santa Claus rally. And the reason why I wanted to bring this up is because we've had a considerable jump back from the lows that we saw recently. Hold on a second. I just want to take a timestamp over here real quick. 41. 47. All right. So are we going to have a Santa Claus rally? That's like the $1 million question. I want a Santa Claus rally. I know everyone wants Santa Claus rally. I'm not sure if some bears in the market want a Santa Claus rally, but I think we're setting up for a pretty nice Santa Claus rally. So if we look at the SPY chart over here, and the reason why I look at technicals is because technicals is really usually going to tell you where something's going to be going in the short term, but more it's a real-time depiction of where price is, what the market's telling you, right? So if the market's going up, the market's telling you, like, I like what I see in the stock market, I'm going to go higher, right? Especially when you're on a long-term trend like this. But if the market reverses a trend in the short term over here, this doesn't look so hot, especially when we see a massive candle like this. Anyways, this isn't a TA trading podcast, but we do have to use technicals along with fundamentals to give us the best idea at alpha in terms of where the market's going to go in the short to medium and especially the long term. If you guys want to tune in for a lot more of the short term stuff, I would definitely tune into Wolf Trading, which is a pretty good live stream that Jordan and Emp do. Also part of the Wolf space as well. I apologize I don't have the link available, but you guys can always check that out whenever you want to on the Wolf Trading on YouTube. But we're coming over here from pretty bad sentiment, right? We look at what happened to UiPath on a micro scale. That's a wild candle. Good Lord, that is a crazy candle. When you do this and you bounce off the 200-day moving average and you set this up coming to earnings right here, like this is just a perfect setup, right? If I look on SPY, the S&P 500 ETF, if I look over here, we bounced off the 100-day moving average. I could not tell you that this was the bottom. I thought it was the bottom. I took a shot at it. And I guarantee you, Big Boy M thought that was the bottom too, and he probably capitalized off that. For some reason, that guy's always on the right side of the ship all the time. But we had the craziest bounce, right? So it only makes sense after a crazy bounce like that to kind of consolidate a little bit. This is the thing, is that people see this move and then they buy calls here, right? You probably should have bought the calls here, but no one's ever going to time everything correctly. But when I'm looking at this, I think consolidation kind of looks a little bit like a bull flag. In my opinion, this looks better than something like this, right? But this has a better setup. But I think that we're going to make new all-time highs. Now, the reason why I think we're going to make new all-time highs is because we got a few things happening here. Actually, I apologize. I think I was thinking about what I was thinking about the other day. I think we are going to make new all-time highs, but I don't know if it's going to happen right now. And the reason why I don't think it's going to happen right now is, well, one, we have a few things that I look at over here. it's going to be sentiment. It's mostly going to be sentiment, all right? But if I look at this NAAIM exposure index, this is basically, it is how fund managers who are part of this survey are positioned in the markets, all right? You have a score from 0 to 100, and it can actually go above 100. It can go up to 200, actually. So 0 means that they're net flat on the market. Like they have short exposure, long exposure, but like they're basically not necessarily along the market, right? Actually, hold on. No. This means of how much exposure they have into the stock market, okay? So it doesn't exactly tell you whether they're net long or net short or anything. It just tells you that you have 100% of your money, 98% of that money is allocated, right? Getting close to 100 means that fund managers are fully allocated to the market, basically. If I look at this breakdown right here, it gives you a chart of the S&P 500 and also the NAIM exposure index, right? Last April, 35%, they were 35% allocated to the market, right? So they were net long about 35%. But if you fast forward to when we made certain tops in the market, we were at 87%. We made the top in February. We were at close to 100%. We made tops in the beginning of December and so on. Like they kind of correlate with each other, but it doesn't exactly tell you that the market's going to go somewhere right now. It just tells you like, okay, there's a risk and reward upside there right now. If I see this at 100, I'm thinking there's not as high probability we're going to make that all-time high right now. And I'm thinking that now is probably a good time to take some short-term risk with short-term data calls off the table or short-term trading positions off the table. Maybe like trim a little bit and so on to strength. But remember though, this is correlated with the S&P 500, which is red today, right? But the IWM is up 1% today. We don't have any type of exposure index that shows how much they're exposed to small caps. We only see it when it's correlated to the S&P 500. And I would even argue that this doesn't really work if you use it with IWM because the indexes are mostly weighted toward the mega caps, which is the reason why the S&P 500 is flat today. You look at a lot of mega caps, they're all basically flat today. But do we need all-time highs for things to keep going up in terms of the S&P 493? I don't think we do. You look at the chart over here, Iron is up 3.5%, Nebius is up 4%, Cypher is up 6%, Lemonade is up 5%. Amcor has been on a freaking raging rally for the last few days. On Semiconductor has been on a raging rally. ENS, another stock talk pick, is just okay. This is a cheat code. Like this is just unfair. Like this is just unfair. Anyways, like all these small caps. If I look on my whole list over here, a lot of semiconductors are green across the board with the exception of Intel. Okay, so maybe Donald Trump sold. We'll see. But like, look at these data center buckets I have here. They're all green. Energy is green. Oklo's up 17%. Small caps are green across the board. Quantum's green. Quantum is up. IONQ is up 14%. Just don't short a market when Quantum is up 14%. Like you do not want to short that market. You'll get your face ripped off. Maybe you want to have like a long short play going on there, fine. But like this is not the market I want to be short on. Software is not doing so great today. Maybe certain stocks are. Oh, look at that. DigitalOcean's up 1.37% today. Interesting. Service Titan actually reports after hours today, so that's pretty interesting to see. And so does Rubrik reports after hours today. Kind of an interesting setup. Oh shoot, Rubrik is coming to earnings right in the 20-day moving average. Okay, not financial advice. No moves. I gotta stop doing that. No moves. So anyways, do I think we're going to make new all-time highs right now in the S&P 500? I don't think we need to. I don't think we have to. I don't think we will. But I think small cap season's back. But I don't know if we're going to be able to get that small cap season without Bitcoin coming back. Now, mind you, Bitcoin is like kind of chopping around here, but Bitcoin is still a nasty looking chart. We're still above almost every single moving average besides the 20-day. Ethereum, the same thing. We need to get above these 200 days in order to find some meaningful recovery. And the only reason why I attribute technicals mostly to crypto is because it's like how do you measure anything in crypto? Yeah, you got some fundamental stuff, but they don't. Bitcoin or Ethereum doesn't report earnings. They don't. You can't see like how you can't see whether people who own big. Actually, you technically could see who's buying and who's not buying, but like you can't see like that's insider buying. You can't see institutional ownership or anything like that. All you can see is just kind of Bitcoin's going up. That's usually what it is when on a fundamental basis. But if you look at the technicals, that's going to tell you a better picture. And I think there's a lot of people that say that Bitcoin does not look great right now, right? But this shows sentiment's coming back. BMNR is up. BMNR is up while Ethereum's flat. So we'll see. We'll see what happens with that one. So I think that pretty much wraps it up for that segment. And the last segment I want to get into is sports. Now, this is actually going to be something I'm going to kind of test run with you all to see how much you guys are very into sports. I love football. Football is an American sport, American football. So don't mean to be insulting to people who are my EU bros or my EU gals or my international Brazilian, Latin American gals, whatever it is, girls, boys. I'm focusing on football, the National Football League. Okay, that is football in my book, dude. We got a crazy game on tonight. And I'm sorry, when the port's up over 10%, like I got to throw some money at football. And if I bring up this over here, all right. I can't. Oh man, I can't. Why do we do a vote? I think I could do a vote. I'm gonna try to do a poll. Let me see if I can do a poll. I'm gonna do a poll, and I'm gonna do. I gotta do. Hold on, how do I do a poll here? Here we go. No. I've never done a poll before, guys. So this is gonna be a first time I'm gonna do a poll. Okay, here we go. Perfect. All right. Okay. All right, this is going to be a cool one. By the way, you guys got to come onto the YouTube account in order to vote for this. But, all right, I just started the poll. Who's winning tonight? Lions or the Cowboys?
I voted the Lions. I would maybe have even taken the Lions if you told me about the spread.
You know, the spread actually is not that bad. So if oh man, I can't bring that up. All right, let me bring up the ESPN. Let's look at the spread over here. All right, we're gonna do a little bit of a little bit of examination over here and see what's happening. All right, so we got a 38.4% chance the Cowboys are gonna win, and we have a 61.3% chance the Lions are gonna win. And the spread, what's the spread looking like? Oh, I can't get on here. I thought I used to be able to get on here.
3.5 is what I was seeing.
Yeah, but I thought ESPN shows it on their website. I guess they only show it on their app. All right, so if I go over here, we basically have, like you were saying. Wait, where is? I'm so used to seeing this in the app. Am I missing it? Where's the spread? Okay. Man, they don't make this easy to look at anymore on the website. Anyways, like Evan, like you were saying, we basically got a 3.5. The spread is basically saying that it's favorable that the Lions going to win by at least 3.5 points, which means that they need to be ahead by at least 4, including 4. And that would really, if it's a close game, that would mean that they would need a touchdown in order to get ahead of that one. But if you look over here, the Cowboys have been winning. They're 2-4 on the away games, and the Lions are 4-2 on the home games. So it's obviously favored to the Lions. But I would argue the Lions have been on fire lately. And if you look at the last couple of games that they had, they beat Kansas City, they beat the Philadelphia Eagles, and Okay, I'm sorry. Who hasn't beat the Raiders? But they've been Prescott's been pretty good lately. Prescott is the quarterback for the Cowboys. That kind of momentum can be brought into this game, and even in the last couple of games, they were at home during those, so they did have the upside, and they are playing at the Detroit Lions Stadium. But if we look at the standings here, I think the Lions really need to win this game. Where's the standing? Oh my goodness! I wish I could bring this up on my mobile, but I can't. Like, because you could see everything on there. Maybe divisional. No, that's not it. That's definitely not it. Where is the standing for NFL? Here we go. Standings. Okay, so if we have the entire league over here, and if I pull up by conference, no, just the division. So the American football, so Cowboys are second place in their division, in their region. Hold on. Yeah, they're second place in the region, like behind the Eagles, which it did beat the Eagles, and the Lions are third place in the NFC North. So it would appear, actually, do the Lions need this one? I think they're both probably going to make it to the playoffs, but I think the Lions might need this one more. So if I look in the conference, then we have the Lions are in 8th place. The Cowboys, yeah, you know what? Actually, the Cowboys need this one, and they're away. So we'll see what happens. They're on a 3-game winning streak. The Lions just lost the last game. If you ask me, I think it's going to be a close game. It's kind of hard to tell who's actually going to win, but I do think the Lions have a pretty good chance of not winning by 3 points, especially if the Cowboys are on a pretty good winning streak. But I think the Cowboys are going to win this game, and the odds are pretty good. So I may or may not have put in a bet on the plus 3.5, which means that the Cowboys can either win or they don't lose by more than 3 points. And I also put a bet that the Lions are going to win. All right, but I am leaning more toward the Cowboys winning. So we'll see what odds at that one. If the Cowboys win, then I still made money. But worst case scenario for me is that the Lions win by more than 3 points. And if that happens, then it's it's a meaningful fun. The Port did really well today, so it's not really such a big deal. But yeah, guys, that is pretty much it for today. I mean, just to recap a little bit, we touched on Meta basically making new highs today. It's not new highs, but recovering a bit from their lows. We went on some earnings recap for Path, UiPath, Snowflake, CRM. We also talked about the Santa Claus rally and my thoughts on that one. Then we talked about some football. So appreciate the feedback. If you guys want to tune in next time on the YouTube channel, go ahead and go to youtube.com/@wolffinancial. Go ahead and like and subscribe there. We really appreciate it. You can go ahead and check me out on X. My handle is @Samsolid57. Really appreciate you guys. Evan, any final words?
No, Sam, this out probably sounds horrible because I had to switch the mics because Stocks on Spaces. But I appreciate you, man. I'm super excited about this. Thank you for letting me hang out here. This is going to be an awesome show,
awesome.
And, this was a great piece of content. Good stuff coming forward. And we jumped like 10, 15 subscribers just during this one. And I know that's literally just So shout out to Sam. A lot of big stuff coming. And we saw Chris and Jose and Emp in the chat today. I'm sure we'll be getting them on at some point. But I appreciate you, sir.
Actually, like you mentioned, Stocks on Spaces is actually going to be starting on. There's the X link for Stocks on Spaces. I'm going to jump on there after this. So if you guys want to hear more of my thoughts, including other popular traders and investors, go ahead and jump on there. That's from 3 o'clock to 4 o'clock Eastern. I'm going to try to be on here every single day, every single weekday, Monday through Thursday, or almost every weekday, the hour before Stocks on Spaces. And we're going to do a little bit of experimenting on the timing and everything. We'll see, whatever you guys want. Just leave some feedback. Go ahead and check out the YouTube page, like, subscribe, and comment on there. Provide any feedback. Feedback's appreciated. And thanks for checking me out, guys. Appreciate